I want to circle back to, you mentioned veterans as they're getting out from incarceration, doing follow-ups with them, doing comp and pen. What is the department's plan to work with veterans courts in regard that way we're helping veterans prior to them actually being incarcerated and moving along the lines with the governor's realignment plan? You know, if we're looking at keeping people out of jail, let's work to keep veterans out of jail, and versus trying to help them once they've been incarcerated, let's help them from being incarcerated. Mm-hmm. What is your guys' plan as a department to move forward with that and work along those lines?
Well, we certainly support the folks in that field as much as possible. The LA Public Council, we worked with them. California California Justice Legal Task Force, I believe. Those are two different groups that, once again, set up models. As you know, there's no requirement by counties to take part in that program. There's certainly no funding for that program. So it's really up to folks in the community kind of rallying together and finding that person that's going to spearhead it. What the California Veterans Legal Task Force has done is they've kind of set up a model in terms of what players you need to have and how to go about setting that up. The South Bay, Judge Manley was a perfect example. He was one of the first to really step out and do that. San Francisco has a totally different approach. They have a cover project which goes in, starts the moment if a veteran is arrested. And immediately they go in and go through arrest records, identify them as a veteran. If they are incarcerated, while they're incarcerated, they're put in a vet pod in the San Bruno jail where they're around only veterans. All mental health services or any kind of services they receive are veteran specific. They also have the option of leaving the facility and
the
going
question
into
wasn't what the different programs offer, it's what is the department's stance in working with the partnership of it?
Well, we're certainly against veterans being incarcerated, if that's the question. But in terms of our actual ability to really jump out there and do anything, that's something we certainly support the folks that are doing that kind of work as much as we possibly can. But I wouldn't say we have any strategic goal right now in terms of addressing that issue.
Okay. And then my last question for you is going back to the outreach. You stated that you guys collect the DD-214s and you send out a letter. What is your follow-up on that, or is that all you're doing? And what is the plan for a follow-up? Because as we all know, anything dealing with veterans, the biggest thing is the outreach. It's not there. I mean, you can drive up and down the freeway and there's a Wounded Warrior Project billboard, but there's nothing referring to Cal veterans, anything of those lines. And you can't tell me outreach is handing a guy a book that says Cal Veteran Benefits, because that, to me, doesn't qualify.
I wouldn't say that for certain. It's tricky. It's hard to get in touch with the veterans throughout the state. As I mentioned earlier, we're restricted by the information we get from the Department of Defense. What you're referring to in terms of the Wounded Warriors Project, that is a multi-million, tens of million dollar foundation. They certainly have the opportunity to put billboards out all over the place. I would certainly like if they start putting CalVet billboards up as well. But I can't see that happening anytime soon. I know we got $400,000 in the last budget cycle to deliver to the CVSOs for them to do outreach, CVSO specific, and we'll have some numbers on the effectiveness of that outreach as we move ahead. However, there's fiscal constraints in the state, as we all know, and touching veterans, we try to do it however we can. Our county veteran service offices are obviously an incredible partner in that. They're our boots on the ground, so to speak. We currently have 8 local interagency network coordinators that are provided that task, and you can imagine how big their regions are, 8 throughout the state. So they have their work cut out for them, to say the least. We certainly have other options. The MyCalVet website, that's certainly something. We do a lot of data sharing with various agencies now because of that website, so that gives us more access. I'm happy to report that over the past year and a half, our veterans in our database have grown from about 70,000 to about 600,000 due to some migration of our vet
I was just
systems and
asking
so forth.
what your plan was as a department to move forward with it. Good.
Thank you, Mr. Mathis. Ms. Brown?
Yes. Thank you. I know we want to move ahead on finishing this, but I wanted to just come back to the disabled veterans. And the reason is because I've asked my staff to kind of go through and tell me what the specific issues were with the disabled vet that has been going to my office. And I want to get these things on the record so that we'll be able to look at it and see if there's something that can be done. But one of the things that, since you've already gone over the goal of 3%, is it now time for us to start looking at maybe 5% or 10% as a
Some states have done that. I know CalVet, our internal goal is 6%, which we've met pretty consistently. Other departments, it depends. I mean,
It's every department sets their own goal?
No, it's a statewide goal of 3%. It's a statewide goal.
So but your goal is different.
Yes, we just being a veteran-specific agency, we've set our goal at 6%.
Okay. One of the things that my staff is saying is that the across-the-board participation, kind of, if you're looking at planning, design, environmental, engineering to construction, currently all of the goals are just dumped into construction. For example, there's no other things that can be done that fulfill this goal of 3%.
No, there's a variety. I mean, IT is actually a really big field in the DVBE. It's a big portion of the pot now.
IT?
IT.
Okay. Okay, the other thing
And
is,
also health service supplies are also another large
Supplies.
one.
Yeah, that wouldn't fit into this person. Okay. The other thing is that many of these businesses need to have bonding. They need insurance. They also are finding that insurance companies just won't sell insurance to them. So they're kind of stuck between a rock and a hard place when the job is requiring it, the state is not helping, and even private business won't give them the insurance. The other thing is looking at the possibility of tax breaks for those companies who are DVBEs, and seeing if they can get a tax break for hiring unemployed veterans on state and federally funded programs. We're only talking about state, but state programs. Do you see anything like that in the future?
There have been federal initiatives to do that. Some states do have state-specific programs that allow tax incentives for folks that hire veterans.
Thank you for allowing me to put that on the record very much. Thank you.
And Ms. Brown, Mr. Spangler said he's going to follow up with you also.
Okay.
Do you have any? Does anybody else have? Mr. Solis, do you?
I can speak if you'd like. I was actually the staffer that staffed Assembly Bill 114 that dealt with the DVB program, so I'm very familiar with the program.
Oh,
and
good.
maybe me and Ms. Brown can have a chat.
We will.
Thank you.
Thank you. I just had a couple of questions then for the CSAVE. What significant events do you foresee in the coming year for that program?
Well, there's been a lot of change. I mean, fortunately, last year, AB 2099 passed, which it codified in state statute our ability to create reasonable criteria for the state approving agency. The Code of Federal Regulations allows us to develop reasonable criteria based on each state's specific needs. California tends to have the largest number of veterans, obviously, but in addition, a lot of schools tend to headquarter themselves in California for that reason. So we have a lot of issues to address that other states don't necessarily have to deal with. So it's the regional criteria allows us to put some things in place that would be specific to California. So we look forward over this next year to kind of addressing some of those needs we have, whether it be access to information sharing, and so forth, to allow us to do a better job ensuring that veterans are receiving the education they are at all institutions.
All right, thank you. And then the NDAA included up to the last minute changes to the 90-10 rule. And do you see that there's going to be another attempt to change the rule coming up?
We'll see. The 90-10 rule it was a fix, but unfortunately it led to a situation where the dollar sign was kind of put on veterans' heads. With that 90, and I don't know if everyone's familiar with the 90-10 rule, but
maybe you can just give a
sure. It's basically it requires any school that's operating, only 90% of their funding can be federally funded. The other 10% has to be from people paying themselves or whatever the case may be. When they put 90-10 in place, GI Bill funds are not considered federal funds. So for a school that brings in a veteran, for every one veteran you bring in, you can bring in 9 other non-veteran students who are completely federally funded. This came up as a big issue when recently, and recently I noticed the Student Aid Commission is having some concerns with healed colleges and so forth. A while back, CalVet pulled the accreditation of healed. Well, we suspended them and then further later on withdrew them due to not meeting some of the requirements of the suspension. And part of the requirement of the suspension was the sale of the school. And folks nationwide were starting to understand that due to this 90-10 issue, a lot of folks were coming in and buying schools where 90% of their product would be funded federally. So they had very little skin in the game when they came in. And if you filled that 10% with veterans, they really had almost no skin in the game. So the Corinthian colleges were having a hard time selling in California, which the Attorney General later blocked the sale of their schools in the state. So that's kind of why, is because this 90-10 rule has really led to predatory practices towards veterans to really push hard to enroll them into school to do two things, but also to grab the GI Bill money, obviously, but also to expand their enrollment of non-veteran students. As I said, for every veteran, they can bring in 9 more federally funded students for every veteran they have on GI Bill.
So do you see anything?
It comes up every year, and they've tried to close that loophole. I know our Attorney General and many Attorney Generals throughout this country have rallied around this annually. So I expect that will happen again. How that will turn out, we'll have to wait and see.
All right, thank you. Do we have any
Sure.
other questions for the Deputy Secretary? All right.
Great.
Good.
Thank you for
so
the
much.
opportunity.
And then our next speaker will be Deputy Secretary Teresa Gunn.
Thank you, Madam Chair. Teresa Gunn, Deputy Secretary of the Farm and Home Purchases Division for CalVet, and more recently known as the Home Loan Division. We've been trying to brand ourselves to help with name recognition out in the public. So for those of you not familiar with the Home Loan Program, we offer home mortgages in essence by the use of self-liquidating general obligation bonds from the state of California. We're able to issue tax-exempt bonds through a special carve-out in the IRS tax codes that allow for, in essence, this private use of state monies. We are one of only 5 states that have this privilege and offer this program. And they are called self-liquidating, so when the governor talks about his wall of debt, these bonds are not included in that wall of debt because the mortgages, the payments from the mortgages are what we promise to the bondholders for payment of the bonds, and that is totally what's used to pay the debt service on the bonds. That's also what's used to pay my salary and the staff salary in the Farm and Home Loan Division as well. So when JP earlier mentioned our $56.7 million budget, that is all out of the 1943 fund. Of that, about $11 million is funding the operations of the Farm and Home staff, and the remainder is paying the debt service on the loans, or on the bonds, I mean. So I don't know how in-depth you want on the understanding of our program. You have to be a veteran, discharged under honorable conditions. You need to be buying a home in California. And we do not rely on FICO scores, as many lenders do. You hit like 650 and you're not going to get a loan in your FICO score. We do not just look at your FICO score, which is typically, for many of our veterans that are coming back from their engagements, can cause difficulty for them, as while they were away, if someone wasn't taking care of their finances, they now have a pretty crappy FICO score, unfortunately. So we don't look just at the FICO score, we look at the total life of the veteran, so to speak, in their last few years' history, and see where they're at, where they're going, and how their circumstances are, and then make determinations on their credit worthiness and ability to pay a loan, and then issue loans based on those criteria. To that end, we've been around since 1921 and have helped more than 422,000 veterans buy a home. We are continuing in that endeavor. As you all are aware, our numbers have not been the most stellar for the last few years, nor has any commercial lending institution, due to that little wonderful thing that we have all been experiencing called the Great Recession and the crash of the housing market. The housing market is starting to recover, and I use that word kind of loosely because we've all seen it go up a little and go down a little. The federal government is continuing to try and aid in that with their quantum easing, and by that they're purchasing up a lot of home loans and artificially keeping the interest rates down, which is most recently making it a little harder for us to be as visibly competitive. And I use the word visibly because right now mortgage rates are around 3.5, 3.75, which is where we're at right now with our rates. We used to be under the market for about half a year, maybe a little bit more. And then the market fell again on us. But we are still very competitive because with our home loans, we also, based on the way that our mortgages operate, we're able to provide group rate home insurance, fire, hazard. Sorry, I always forget the last one or say it wrong. So let me look at my note. Disaster indemnity insurance. So every home comes with fire and hazard, including flood and earthquake, for a rate considerably less than you could purchase on the going market, and with extremely low deductibles to make it affordable. And they include full guaranteed replacement cost to repair the homes. So that insurance makes it really hard for others to compete and makes it a very good thing for our veterans. And our veterans who are finishing paying off their mortgages are frequently calling us asking how they can extend their insurance with us, which you can't unless you take out another loan with us. So we're helping some of them to repair their homes or bring them up in, to update them. With that, with the housing crisis, and I know in your packet you had a little table that showed how our loans have not been stellar, especially in the very bottom of the market through 11-12 and 12-13. You can see in 13-14 we took off like a rocket. We closed 284 loans, about $72 million. Right now, as of last week, we're at 253 loans, so we're easily going to exceed 284 that we did last year. I think we'll get closer to about 400 loans before the end of this fiscal year. And we are right around $70 million in the amount of loans funded this year, and we fully expect to reach to about $120 million, which is our goal for this year. And next year we expect to exceed what we do this year again by a good stretch. The remaining part of the home loan division now is the Veterans Housing and Homeless Prevention Act program. And we are in the final stages of completing the program guidelines to issue the first notice of financial award for $75 million. We hope within weeks, I shouldn't say hope, we expect within weeks we will have that out. We're literally, hopefully within days, we're finalizing one minor point in the documents to be able to release them. And with that, I will leave it to you for questions that you may have of me.
Does anybody on the committee have questions? Assemblymember Salas.
Thank you, Chairwoman. I just had a couple of questions. I was wondering, one, how does Prop 41, with passage of that passing, does that have a direct impact on what we're doing here?
It doesn't. Well, it does in that the Veterans Housing and Homeless Prevention Program is funded by Prop 41. But the farm home loan program that I spent most of the time talking about, it doesn't.
It doesn't.
Within the home loan program, one new initiative that we have entered into are the residential enriched neighborhoods, REN for short. And those programs reach to low-income individuals and offer them the opportunity for home ownership in a homeowners association. So we build a community. Our first pilot project was in Sylmar, where we built 12 homes. We then market those at the cost to build them and sell them to low-income individuals. We're targeting 60% average median income for the area. With that particular project or group of homes, we reach down to around 50% AMI. The individuals buy a home. We use the construction loan process through the home loan program to help finance the building of all the homes at one time. We partner with a nonprofit builder in the community who also partners within the community to provide enriched services. We work on an equity sharing or an equity requirement to build the home, so the veteran must put in 500 hours of sweat equity in order to be eligible to get the home, and part of that sweat equity is done through educational classes and mental health and other therapeutic classes as they may need.
Got it. And of those programs that you do have, are those proportionately seen? Well, you mentioned the example of Sylmar, but are there examples, say, in the Central Valley? Is it throughout the entire state? Like most of the home loans that you do offer, are they?
The home loans are across the whole state. The REN communities are targeted to communities that have sufficient employment for low-income individuals and have a sufficient veteran community in them. And we're just building that program. So we do about 40 loans a month right now. 5 of those are for REN communities. And we've got several communities in the growing stage. Now, part of the REN community requires that we're working with the city or county. They donate the land to us. It's the only way we can make this affordable. If we don't get that land donated, we can't make an affordable community for the individuals.
Got it. And as of right now, out of the 58 counties, are most counties partnering with you to do that, or?
No, and we wouldn't necessarily be looking to most counties to partner because some counties would not have a sufficient concentration of veterans to be able to pre-sell and purchase these homes particularly. But we are working in several. We have a couple in Riverside. We have a few in the Santa Clarita, San Fernando Valley area. We're working on a couple here in the Bay Area at present, but we are growing slowly to ensure we put the program in place correctly.
Yeah, I'd love to follow up with maybe with have my office follow up with you to see if you're doing anything in the Central Valley.
Not
Because
yet.
usually we're left out.
Not yet. We've talked to Fresno a couple of times, and they are presently back looking for land. They've come to us a couple times with land in the vicinity of our veterans' home there. And then when they go back to talk to the landowner has changed their mind. So we haven't been successful in bringing one in there yet, or getting an agreement for one yet.